Hello, this is Steve Sanangelo from the SRS Rock Report with a new YouTube update, the coming global market collapse and why protect wealth in silver. It's been an ongoing theme. More people are waking up, and it's the energy cliff, which I continue to talk about, will destroy the value of most assets, except the precious metals, because they protect wealth, they protect energy value, which is the global economy. So let's get started. Now, before we do, I just want to let you know, a lot of people are still paying a lot more for precious metals. And these are I just wanted to show you Cloud Hard Assets, who we sponsor at the SRS Rock Report, has the lowest prices. And if you look, these are the top four precious metal dealers online. You could check these prices from 1 to 99 coins. That's the premiums they charge for Krugerrands, and Cloud Hard Assets is almost $1.50, $2 less. And they also have very low Philharmonic. So it's important, if you're going to buy precious metals, try to find the lowest prices. Now, this is from the SRS Rock Report. It is a free member post. It's the Seneca Cliff, the collapse of the debt bubble, and the Palisades radio chat live on Twitter. I did that with Tom last week from Palisades Radio. You can access this either by going to Twitter to Palisades Gold Radio. You do not have to join, but if you go to Palisades Gold Spaces with Steve Sanangelo, it's a 5-hour recording. And he also has it on YouTube. If you go to Palisades Radio YouTube channel, they'll have it under Twitter Spaces May 19th, the part 1, and then part 2. We had several people speak. I was the major speaker. I talked about the energy cliff. And if you don't understand energy, you have no idea what's going to happen in the future and why it's important to own precious metals. You got to forget all the other reasons. It's the energy now is the most important. You need to educate yourself with energy. You can find out a lot of what I'm talking about if you go there and listen to that 5-hour conversation. Now, I posted this a week ago for the silver members at the SRS Rock Report. The collapse of global vehicle production has begun. It's important to understand what's happening. I provide that information for the subscribers. And I also talked about we're in trouble. Wind turbine makers are selling at a loss, and it's a self-destructive loop, bosses, the executives admit. And so the problem, we were going to go to green. Unfortunately, with skyrocketing oil prices, skyrocketing natural gas prices, especially in Europe, where a lot of the wind turbines are manufactured in Europe, they're selling them for a loss. So the whole idea to go green is not working. So that dynamic is drastically changing. I did a post for that on the collapse of the wind turbine market that's coming. We need to understand those dynamics. And then this is from Gravitas. They do an excellent job. You can go to YouTube. They're Indian, English-speaking media. They put out great videos. Basically showed that the UN warns 170 countries have severe exposure to the consequences of the Ukraine war. And I would also add the energy cliff. The Ukraine war and going to green has just sped up the energy cliff dynamics. So 107 countries have a severe exposure. And what they say is the 107 economies are facing risks due to rising food prices. A lot of wheat comes out of Russia and especially Ukraine, rising energy prices, and tougher financial conditions. However, the video, they go on to say that 69 countries face all 3 risks. So if you go to Gravitas Plus, watch which countries are going the Sri Lankan way. I highly recommend that video because dozens of countries are facing massive risks now. And I think that's just going to continue as time goes by, which is fortunate for people who own precious metals. Now, getting to silver. I put this out last year, breaking the silver market, investment demand to overwhelm the market. There's 2 different markets. I continue to re-educate the precious metal investor. We've got the institutions and big banks They mostly go into ETFs. Small and medium-sized investors buy more physical, and that's the way the market is. And that dynamic is changing. Let's look at the SLV iShares Silver Trust. This is the institutional ownership. And I continue to talk about when institutions start to transition into the precious metals, especially silver, they're going to do that in the ETFs. And silver, the SLV is the biggest one. So we could see we had a huge, this is the shares in millions. It fell, now it jumped back up in the Q1 due to the Russian-Ukraine war. If we look at the Sprott PSLV, there it didn't even have a downturn. It's now up to almost 65 million shares are owned by institutions, and this is just a drop in the bucket. Let's look at a little bit more information. This comes from my Fintel subscription. This is the SLV institutional ownership. Look at this. The average portfolio allocation is 0.27. All right, that's it. And that's the average. And I've mentioned this in my subscriber videos and even the Twitter Spaces chat that the large companies, the big banks, it's 0.002, or BlackRock. It's so small. If they just double this to a 0.5%, we're talking a big move in silver. It's going to go to 1%, 2% and higher. And again, the institutional's ownership is only 4.5 billion. That's peanuts. And again, total SLV shares outstanding are 607 million. Institutions own 177 million currently. They own not quite a third, 29% of all the outstanding shares. Now let's take a look at the PSLV. Its average portfolio allocation is almost half that of the SLV, because the SLV was 0.27. The PSLV is 0.1516. This is chump change. And it's only 583 million. Very small amount of investors, institutional investors in the Sprott. And of the total PSLV shares, which are 453 million, institutions only own 14%. Again, that is half of what the institutions own of the SLV. The reason why they go in the SLV, there's 4 times the amount of shares. And again, this is just the beginning. Even though you may agree with the ETFs, this is where the institutions are going to move into, and they have been. It's just beginning. When we see explosive movements into these ETFs by institutions, along with institutions buying physical and retail investors buying physical, we're talking about a whole new market in the silver market we've never seen before. Now, I want to show you what's happening with the inventories, because the Russian-Ukraine war has really changed the dynamics in Europe, especially in Germany. And now Sprott, the PSLV, we can see, look at it, it's pre-COVID, it was 60 million ounces. The peak was 161, and that's where it's at. So it's at its all-time high. The ETF securities, which has got 168 million ounces of silver, it's also at its high, because pre-COVID it was 115 and it shot up. Now it's 168. And a lot of this is held in London for the European market, but it's held in London. And then we have the iShares. Now it did shoot up during the when we had the Wall Street silver squeeze. It came down and it's back up. So pre-COVID it was 350. The peak was 675, but it's 562. It's 200 plus million ounces more. So we're seeing, even with a lower silver price, we're not seeing we're seeing peak highs in these silver ETFs now and inventories. Now, the only one that's different is Deutsche Bank. And I believe, from what I've heard, traders or companies that had held silver in Deutsche Bank ETF, they were getting margin calls, because let me tell you, it's really hurting the German economy. So they're selling their silver to offset margins elsewhere. And before the COVID, it was 30 million ounces. It shot up to 75, and now it's down to 26. It's even lower than where it was. But Germans, according to the Silver Institute, Germans were the second biggest physical bar and coin investors in 2021. It was like 45 million ounces. The United States, Americans were 118 million. And if you look at per capita, Germans were even larger investors in silver per capita than Americans because they understand Weimar Germany and hyperinflation. And so I believe we're going to continue to see movement into the ETFs when institutions protect wealth due to the negative dynamics of the energy cliff. Now, let me show you this too. This is the London Gold ETF holdings. And we could see when the price of gold spiked up in 2011, and then again in 2012 before it sold off. The inventories were lower than the price. Now it fell, the inventories are back up, but look, the inventories are they're higher than what they were, but then they're not higher than the price. Now take a look at the London ETF holdings. We see a massive increase in the silver price, reached almost 50, sold off. But look where the London holdings are. They were a little more than 10,000 tons, maybe 11. And look what's happened since the pandemic shutdown. The price is less. This is the price of silver right here compared to what it was back in 2011-12. And look at the inventories. Now, is all the silver there? We don't know. But I keep telling listeners and investors, if there isn't the silver there and big institutions move in, and all of a sudden they find out the silver is oversubscribed, there isn't the silver there. Well, they've got a team of lawyers that are going to sue JP Morgan and these other companies. And what is that going to do? That's going to announce to the world that there isn't the silver there. What is that going to do to the silver price? It's positive that we get institutions and large investors to move in because it's going to put a spotlight on the silver market, and there just isn't that much wholesale silver to get. That's the problem. If there is all the silver they claim, there just isn't enough silver in the world compared to the 400 trillion in stocks, bonds, and real estate that's going to really start to lose value as we head over the energy cliff. Now, one of the things I showed my subscribers, and this came out, I put this chart, this was as of May 13th. We need to understand the bottom of the silver price is the cost of production. Silver price downside is limited due to the cost of production is now in the $20 level. It's actually maybe closer to 21 with oil at $100. So this is as the price of silver went up, it would always come back and touch the cost of production. Shoot up, come back down, hit the cost of production. Cost of production. Well, now this is the new cost of production. So it looks as if silver, even though during a major market correction in the Dow and the S&P, we could see lower energy prices. We could see lower metals prices. However, now with the cost of production being much higher, I think the downside is limited. Even if it goes lower in the teens, it's not going to stay there long because investors and traders are going to buy it back up. And also, if we look at the current CO2 report, it's actually much better than gold. You see, when you have a large line down here, when you see a large red line, that's a very high commercial net short position, and that means the silver price is at a high. As the commercial net short position declines, the silver price falls, and then it goes back up, the silver price increases, up and down. And so with the silver price selling off now, it's getting to a low where also it's a bottom. So even though we could see lower silver prices, the reason you should be in silver, not because of manipulation, you have to forget all that analysis from these people in the precious metal industry that talk about it. Forget that. It's no longer important. What's important is the energy dynamic. The energy dynamic is the reason why you invest in precious metals. Why? Because the energy is the number one driver of the economy, and silver and gold are stores of energy value. They don't store energy, They store energy value, and they have been for thousands of years. There's just way too many asset values that are overinflated, and there's way too much currency that's overinflated. And that was fine when energy production increased, but as it peaks and declines, currencies are going to start to implode, even the dollar, and also asset values of stocks, bonds, and real estate. So that's the reason why you invest in silver, even at lower prices, because the energy cliff dynamics are coming. It's a guarantee. And that's why you should be in the metals. You should not be concerned about the price movement. And oh my gosh, silver's going nowhere in 10 years. Well, we don't have 10, 12 million barrels of oil production growth in the next 10 years. That's done. So there's no more economic growth. It's basically over. So I just wanted to show you the gold CO2 report. Gold has a much lower cost of production in relative terms. It's about $1,500 now, 15 and maybe a half, with the gold price at 1830, 1840. So we could actually see the gold price fall more because there's more buffer in the cost of production. Silver, it's tighter. It's the cost of production now is closer to $21. So to me, silver is going to bottom sooner, and the precious metals are going to bottom sooner than the overall markets. And lastly, now I just did a post for the gold members. The top four gold miners costs surge in 2022. I mean, really jumped. And the oil price is even higher in the second quarter. And I also talk about peak gold. I talk about why that's coming. Even if the price of gold doubles to $5,000, we with the oil production falling, we're not going to have the energy to continue growing production. So production can decline. And even with the breakdown in the global supply chain, these big companies like Barrick and Newmont and Anglo Gold and Gold Fields and Agnico Eagle, they may not be able to get the materials, energy, supplies, and equipment they need to keep maintaining or growing production. And this is important to understand. That's why it's very important to be in the precious metals physical first. And if you're going to speculate with a small amount, you can in the miners. So it's important to understand what's happening with energy. We're going to hit this energy cliff. The world has no idea. They just think this is a temporary problem of the global supply chain, first due to the COVID shutdowns and then due to the Russian-Ukraine war. No. Those two dynamics just put a spotlight on the energy cliff. It sped it up a little bit. So you need to understand these dynamics and why it's important to invest in silver, and why with institutions controlling 80% of the market, when they start to wake up, more of them are going to move into the ETFs, into silver and gold, and then more large investors and more retail investors and regular people are going to start waking up, and that is coming. So even if we get a lower silver price, it's a blessing in disguise. Well, thank you very much. And if you have any comments, please leave them in the comments section. Have a good day.